This weekend, $428 billion simply vanished. And the banks are praying you never, ever find out. While you were sleeping, the biggest banks in America ran to the Federal Reserve like children running to their mother, exposed, desperate, broke. The repo market, the hidden backbone of the entire financial system, just went into cardiac arrest. This wasn't a request. This was begging. The same banks that call you reckless for buying gold were on their knees at 2 a.m. asking for a lifeline. Like 2008, like 2019. But worse. This is not a drill. This is not a warning. This is happening right now. I have the numbers. I have the proof. And what I'm about to show you proves the entire banking system is running on fumes. Here's exactly what happened. Friday night, February 6th, 2026. The Federal Reserve's emergency lending window exploded. Banks borrowed $428 billion in a single night. Let that sink in. $428 billion in one night. The normal number? $50 billion. Maybe $60 billion on a bad day. This was 8 times higher, 8 times. Now most people have no idea what the repo market even is. That's not an accident. They keep it hidden because if you understood it, you'd never trust a bank again. The repo market is where banks borrow cash overnight. They put up bonds as collateral. They get dollars. They pay it back the next day. It's the heartbeat of the banking system. When the heart beats normally, no one notices. But when the heart stops beating, everything dies. And right now, the heart is failing. Strip away the jargon, and here's the ugly truth. Banks ran out of cash. They had bonds, they had assets on paper, but paper doesn't pay the bills. Real dollars do. They didn't have them. So they crawled to the Fed. And the Fed printed $428 billion overnight just to keep the lights on. This is not normal. This is not a small problem. This is the same pattern we saw in September 2019, the same pattern we saw before 2008. But this time is different. This time is worse. The Fed was supposed to be shrinking its balance sheet. Instead, it just expanded by $500 billion in one weekend. But that's not the real story. Here's what happened behind closed doors. This cash crisis didn't come out of nowhere. The banks created it, the Fed enabled it, and you're going to pay for it. Connect the dots with me. For years, the big banks have been playing a dangerous game. They took your deposits, they used that money to buy long-term bonds, they collected the interest. Easy money, free money. But here's the crime. They didn't keep enough cash on hand. They were leveraged, overextended, and running on fumes. Then interest rates rose. Those bonds they bought, they crashed in value. The banks were sitting on hundreds of billions in losses, unrealized losses, hidden losses, losses they never reported. Do you believe in coincidences? I don't. I believe in crime. When people started asking questions, what did the banks do? They didn't answer. They ran to the Fed at 2 a.m. behind closed doors, and the Fed fired up the money printer to save them. This is a bailout, a silent bailout. They won't call it that. They'll call it liquidity support or market stabilization. But strip away the fancy words, and here's the truth. They broke the system, and they're making you pay to fix it. Every dollar the Fed prints steals value from your savings. Every bailout makes your dollars worth less. This is theft, legal theft, but theft nonetheless. In 2008, they did this in the daylight. People saw it. People got angry. This time, they learned. This time, they do it in the shadows, through the repo market, through overnight lending, through mechanisms the average person doesn't understand. But you understand. You've been watching. You've been stacking. So what does this mean for your money? Let's run the numbers, because this is not speculation. This is arithmetic. The Federal Reserve's balance sheet was at $7.2 trillion before this past weekend. After the emergency lending, it jumped to $7.6 trillion in 3 days. Do the math with me. U.S. bank deposits total around $17 trillion. The banks are required to keep reserves, but the actual cash reserves, less than $200 billion. That's it. $200 billion to back $17 trillion. That's a ratio of 85 to 1. For every dollar they actually have, they owe $85. Now here's where it gets dangerous. If just 2% of depositors wanted their cash, the system breaks. 2%. That's all it takes. That's not a bank run. That's a Tuesday afternoon. And what did we just see? Banks scrambling for $428 billion because they didn't have it. The math doesn't lie. The banks are insolvent. They have assets on paper. But they don't have cash. And in a crisis, paper burns. Only cash survives. Only gold survives. Only silver survives. Now here's the terrifying part. If bank withdrawals increase by 5%, the Fed will need to print trillions, not billions, trillions. If it happens fast, they can't print fast enough. If they can't print fast enough, banks close their doors. This is not my opinion. This is 4th grade math. The banking system is running on faith, and faith is running out. So what happens next? Here's what's coming. And I want you to remember this video when it happens. Gold is going to $5,000. Not because I want it to, because the math demands it. When the banking system fails, capital runs to safety, and the only safety left is physical metal. Silver? I see $100 as the first stop, not the final destination. The first stop, the timeline. The next major bank failure hits within 90 days. Watch for these signs. Repo borrowing staying above $300 billion. More banks going to the Fed window. FDIC emergency meetings. Gold premiums exploding at dealers. When you see these signs, the doors are closing. By the time the mainstream media reports it, it's already too late. Listen to me carefully. If you wait for CNBC to tell you to buy gold, you've already lost. If you wait for your bank to admit there's a problem, your money is already gone. The people who prepared in 2007 became wealthy in 2009. The people who laughed at them lost everything. History is about to repeat, but this time it's bigger. This time it's faster. This time, there's nowhere to hide except physical metal. Here's the bottom line. You were right. Every time they called you crazy for stacking, every time they laughed at your silver, every time they said the system was fine, you were right. They were wrong. What we're witnessing is the greatest wealth transfer in human history. From paper to physical, from the unprepared to the prepared, from the believers in the system to those who saw through it. You saw through it. Here's what you do. Hold your gold. Hold your silver. Don't let them shake you out. Don't sell for paper promises. When the banks come begging, you'll have what they need. If you can't hold it, you don't own it. Remember that. This is Money Mind Hub Pro, and I'll be here every day, watching the collapse unfold and making sure you stay 3 steps ahead. If this video opened your eyes, hit that subscribe button. Share this with every stacker you know. The clock is ticking. Stack on. This video is for educational and informational purposes only. It is not financial, investment, or trading advice. Always do your own research before making any financial decisions. Invest at your own risk.